Okay, today what we're going to talk about is another component in the balance sheet, which is the liability section. You'll recall from earlier discussions that we had, the assets, the liabilities and the equity section. Now the liabilities, similar to the assets, are classified into either current liabilities or non-current liabilities. Current liabilities are those that you're going to pay in the next 12 months. Non-current liabilities are those liabilities that you're going to pay over a period extending beyond the coming 12 months. So the classic basic inclusions for the current liabilities in a standard balance sheet would be things like a bank overdraft. Okay, we owe the bank money at the end of the year. They've got us secured up to the wazoo, taking everything, including the life of our firstborn, as security for the money that they've extended us under the overdraft. There will also be an account called trade creditors. Now this is also known as accounts payable. Okay, that's the money that we owe our suppliers. It could be the gas company, it could be our stationery supplier, it could be our fuel supplier, it could be our supplier of products that we need to manufacture in our business. So we've got our bank overdraft, we've got our trade creditors. The other things that we can often find in the balance sheet are what I'll call ATO debts, which are money in Australia owing to the Australian Taxation Office. So tax debts basically, because the tax office generally likes you to pay your tax debts within a 12-month period. They get a bit upset if you don't. So that's an amount owing by the business to the tax office. That's an amount owing by the business to our suppliers, and that's an account owing by the business to our bank. The other thing that we can have in here are short-term loans. Now they can be to the owners of the business, where sometimes the owners of the business will tip money in to assist with the cash flow of the business. So we'll find that those short-term loans are in there, and they look to be getting paid within the next 12 months as business situation improves. These can also be long-term loans, but we'll talk about them when we talk about the non-current liabilities in the balance sheet. So, overview of the current liability section of the balance sheet is you'll generally have what we owe to our primary supporters of our business, being the bank, our suppliers, tax office debts, and any loans from anybody that's given us a short-term facility to assist us with our trading. Hope that improves your understanding of the current liability section of the balance sheet.